Malcy's blog has recently updated its 2018 oil bucket list of must-have stocks in the oil and gas sector, and one of the original 14 stocks on that first list 3.5 years ago has been dropped. Today the list consists of 16 stocks, and there's a new addition to recover from that one that's been dropped. Let's get an update now with what's going on with the author of Malcy's blog, is Malcolm Graham Wood, also director at Hydrocarbon Capital. Malcy, thanks for dropping by. I think your bucket list overall in the first 6-7 months of this year is up something like around about 15%. Brent's up 12, WTI's up 10. So you've beaten the benchmark crude. How do you feel the first half has gone?
A lot better than last year, actually, because last year when the oil price started to pick up nicely, the oil sector just did not. So the oil prices, the share prices didn't pick up very much. This year they've done quite well, and in fact, you know, the top half a dozen, 8 on that list are all up, and some of them are up quite substantially. By the very nature of the game, you know, you've got 2 or 3 stocks up 50, 60, 70%, and some which have yet to recover, and which is why Pantheon came off the list. But
okay, let's look at that list if we can, and bring up the list we got here. As you say, Pantheon was the one that's been dropped. Genel has come in its place. Now, Pantheon was actually down 61% in that period, so we added that into the calculation to say that you're up 15%. So that 61% loss has come off that spread. Let's take a look at some of these that sort of attract the eye, if we can. I want to begin with the top one there, Rockhopper, up 73.6%. Now, Rockhopper was one of 2 or 3 stocks that were interested in what was at one point tipped to be the really big new oil play just in the South Atlantic. Very deep, very difficult to some degree. You've got qualifications.
I've got qualifications. It isn't so deep, and its weather, which everyone says is awful, is no worse than the North Sea. But it's far away, and that's the other thing. And of course, it's next to Argentina, where you have therefore logistical problems and political risk and so on. But Rockhopper is on there because, I mean, it has been on there right from the start, because at some stage I knew that providing the oil price, you know, came to its senses and was realistically higher than it was, if you remember, in February 16, then Sea Lion, which is the field in the Falkland Islands, would get the go-ahead. Sea Lion is now profitable at $40, and at $75, with a feeling that we're not going to crash too far down on any bad news. Sea Lion works. And it's a $1 billion barrel oil field. So, you know, I've been waiting for this moment. Rockhopper has now delivered the 70% rise. My guess is that, and that's why Premier is up there as well, because Premier obviously in Sea Lion as well, although they have other things. My guess is that we'll get a final investment decision on Sea Lion towards the end of this year, maybe the very beginning of next year, and then we'll take it in the next stage further, because at that stage they'll have all the contractors on side, they'll have any further loans they need and senior debt and so on, so it'll go ahead. So
you're saying that at what, 39 pence a share, Rockhopper's done all it's going to do for the moment. You're waiting for that next bit of news, or do you still see it as being undervalued given what they...
I think it is undervalued in total without any doubt at all, but I don't think it'll go much further until we get confirmation that the FID for Sea Lion's gone ahead.
Yeah, okay. Let's go back to the list. You mentioned Premier, but I want to skip that. You mentioned it very briefly. I've got to talk about Hurricane. This is something that a lot of clients talk about. Up 57.7%, the 3rd best performer on the index. This is unique in its approach to what it's doing, isn't it?
It is indeed. It's fractured basements. So normally you'd find that a well was, you know, say in the North Sea was a sandstone or whatever. A fractured basement is different altogether. There are fractured basement plays around the world, and Robert Trice, who's CEO of Hurricane, has worked on them before and knows what they're like. And therefore, when he found this, he was pretty confident that with all the work. But of course, you know, the market and certainly the players who are interested in buying Hurricane or farming in to that acreage want to see this flowing properly. You know, it flowed quite well from the wells. I mean, 12,000 barrels a day from one of the test wells shows that it's actually possible flowing, but they want it to flow for 6 weeks or 3 months. If that happens, I mean, Hurricane have said first oil in the first half of 2019. All the logistics are going according to plan. We're just waiting for the FPSO to leave Dubai on its 6-week trip to the North Sea or the west of Shetlands. If they then plug it in and it starts to flow, and beginning of next year we have flow rates. You know, the 50p share price at the moment will be for the win, because I've got a target of 100p a share on Hurricane, but you know, that's whilst, you know, first oil is yet to come. If first oil comes, then, you know, we've heard that many of the majors, BP and Total, I mean, a load of them will be seriously interested, and they've got a choice. They can either, you know, they're in the data room already. They can either participate in a farm out, or they can you know, try and have a go at the whole company, because, you know, this is just talking about Lancaster. This is the early production system on one part of the field. You know, they've said that they'll take it to the early production system, produce 17,000 barrels a day, and then they'll have the cash flow to start drilling in the rest of it. And there are several other huge prospects in this company, in the acreage they have.
What about BP? What about Total? Do they have acreage which includes prospects that are going to be extractable, given the fractured basement idea? Is that what you're saying, that they've got ideas of where they could apply the fractured basement patent?
Not particularly. I think that the geologists that I've spoken at these companies think it's going to work. Yeah. It needs to go to board approval for these things.
Right. Assuming it does for Hurricane, does BP then look at Hurricane as a prospect because it wants the technology?
No, I mean, it will use the technology, but, you know, fractured basement technology is not unique around the world. What they'd look at is you know, a billion, 2 billion barrels of oil on the doorstep. Yeah. BP happened to have the Clare development, which is just adjacent, but that's neither here nor there really. Total, or one of the Chinese companies, or, you know, any international major will be having a look at this. BP said at a conference in Aberdeen last year they would dearly like to buy this, but they wanted to actually just watch it flow, and everybody is waiting there to see whether this flows or not. So, you know, the first half of next year, the first quarter, the first few weeks of next year are going to be amazingly exciting for Hurricane shareholders. 49p
up to £1 in your book at the moment, so that's interesting. Let's go back to the list if we can, and take a look at the next stock I want to look at. I'm going to jump over Farfair and Echo. I want to go for SDX Energy, up 28.5%. This is another stock that a lot of clients are talking about. It's very popular in the retail space.
Yeah, I mean, it's Morocco and Egypt, and actually when I did this in February, SDX was the top of the list. It was the best performer last year. Well, you can see from the chart there. It's come back a bit. That's partly because they've had less activity. They had a flurry of activity last year. They didn't, if I remember right, they didn't drill a dry hole last year, and they were picking up on the Morocco acreage that they got from Circle Oil. An acquisition they made a year and a half ago, and they picked up on those, and they just drilled everything, and it came in. And the Morocco side of that business is incredibly profitable. Gas sales in Morocco goes for $10.50 an MCF, and it will be 12. Their all-in costs are less than $1. An MCF, so it's a high margin, highly successful business. This year they've turned more to Egypt for the time being, which has been equally successful, but that will come on stream towards the end of the year. So I think you know, people are waiting to see, but the stock is incredibly cheap. I mean, I've got a price target massively in excess of the current price, let alone the peak from before of 73 or whatever it was.
Yeah, that's right, up here. That was just May this year, but here we are now at 56. So as you say, a little bit of a pullback opportunity potentially then.
Definitely, very definitely an opportunity, yeah.
To buy in. Okay, back to the list. Rebold Resources. We spoke about this at the early part of this year. What's going on there? Up 20.5%. What's happening at Rebold to continue your interest in this stock?
Well, Rebold is two former M&G fund managers, Sachinoza and Stephen Williams, who have put together a really super portfolio. And interestingly, they've gone for taking a percentage of a company, like they did with Corellian. They've got an asset in Hungary, in the States as well, and they've got various things. And more importantly, they are going to be drilling, or with partners who are drilling, 6 prospects in the next few months, and the market think that that's very exciting. I agree. They're in Wick, which is in the Murray Firth in the North Sea. They've got offshore the south of England, which more marginally offshore the south of England, which should be exciting. You know, I think that Rebold has really captured the imagination. It's already higher than it was in July. And I would expect that to be a very, very exciting run in the second half.
Okay, all right. Moving on to the next one, Jersey Oil and Gas. another one we've spoken about before, and another one that's of interest to retail. The retail market up 15.5%.
Yeah, and I mean that's come back a little bit since then, because the drilling of the, I mean, last year Jersey Oil and Gas was the high risk play. We went in there because, you know, it had effectively this Verbier play in the North Sea, but they're in with the Statoil, Equinor called now, but they're in with Statoil, who drilled that well. It didn't look right, and then they drilled a sidetrack which worked, and now they're drilling the appraisal well. Now, Equinor said that they were going to drill that well as one of 3 wells they're drilling this year. The market was assuming it was going to be the first, therefore be drilling in September, October. As it is, Equinor just said it's the 3rd rather than the 1st. Shouldn't make any difference at all, but of course in the last couple of weeks the shares have come back a little bit. There is huge upside in Jersey. I know that you know, we're looking at, in this case we're just looking at the Verbier appraisal, but actually, you know, the group, the JV, did a huge 3D seismic on not just this area but the whole area around it, because I am convinced that Equinor think that there are many more potential fields in this block, and so let alone what happened to the Verbier appraisal, which will be December probably, let alone what happened to that, there's lots of upside in this business.
Upside from where? 182 at the moment. The highs that we had after this very volatile period, which was what the end of the 3rd quarter, beginning of the 4th quarter last year. Highs were 382 pence. Is that achievable from this 182? Oh,
without doubt. I mean, you know, if Verbier comes in, I think that you've got at least £3 a share in Verbier alone, and I happen to think that there are several other prospects on the license as well. I think in due course this share should be £5 a share.
Wow. Okay, all right, that's Jersey Oil and Gas. I know you want to talk about Savannah Petroleum as well. Another exciting stock with lots going on around it. This is the nice thing about these small companies, there's lots going on.
Yeah, no, Savannah is probably one of the most undervalued stocks that I cover, and I sort of can't always work out why, because they originally started with drilling for oil in Niger in Africa, and that process has started this year, and they've actually had 3 out of 3 successful wells which have come in, and they're drilling another at the moment. It wouldn't surprise me at all if that didn't come in. And there were people who said, well, the trouble is in Niger, it's difficult to know where you're going to sell the oil. CNPC are there, and they have a pipeline, and there are various opportunities like through Chad or to northern Nigeria. Last week, Savannah signed an MOU with the government of Niger, who've effectively opened up the process of selling all the oil that Savannah can produce internally to their domestic refinery. So not only you've got 3, potentially 4 discoveries in a row, and the option on 6 or more rigs to drill more wells, but you've got to sell, and I think they'll start selling that oil before the end of the year, and they'll ramp it up slowly. But it'll mean cash flow for more wells and a successful business. The market has a slight concern. This is the acquisition that Savannah took a long time making last year, called SDX Energy in Nigeria, which gives them, you know, 30,000 barrels a day, fantastic cash flow, an opportunity to increase that through pipelines and new customers, and a midstream business that will make a lot of money. It's not completed yet. There are people in the market who say, I don't think this is going to complete, or I don't want to buy Savannah until the completion process. I spoke to Andrew Knott last week. He is absolutely convinced. It's just, you know, dotting the I's and crossing the T's and all that sort of stuff. And in the next quarter it will be signed. Because quite why the Savannah share prices are slow, with discovered oil and a market for it and a big business to add on in Nigeria, it's not right. It's just, you know, massively undervalued.
25.9 pence. Yeah. Where's that due to go? What's your?
Well, I've got 55p for my valuation at the moment for that stock, but in due course, I suspect quite a lot more.
Yeah. Okay. Back to the list. President Energy. We're now starting to look at some of those that are on the way down. 4.7% up to the point at which you reassessed your bucket list a short while ago. Why is it down 4.7?
Don't ask me, because it shouldn't be. I mean, it really shouldn't be. I mean, this stock is what, 9.5p, 9.25p. It raised money at 10p last November, and really successful raise. And they've got people like Schroeder's in, and so they've really good quality shareholder list. Good backers. Peter Levine, who runs it, is, you know, one of the best in the business. He's got his own money behind it, and So they raised money last November at 10p. Since then, they've increased their production by 60%, which is giving them over $2 million a month in cash flow, and the shares are down. I can't understand that. You know, they've got a huge asset down there in Argentina. The acquisition they made, which is where the increased production is coming from Chevron, has turned out to be an absolute gem. The existing acreage is still producing. It's a mystery to me, and it will go up in due course.
Okay, I want to move on to Sound Energy, formerly Sound Oil.
Yeah.
Sound Energy is down 15.2%. I guess the same sort of question is, why is it down? I mean, this is a company that, I mean, has been obviously a lot higher than where it is at the moment.
I think you have to look at the longer chart to a certain extent, because of where it came from, and it's still well above the the sort of 5p when I sort of first came on. I knew 3.5 years ago, whatever, 4 years ago. But that's not the point. The point is that it had a really good run with the discoveries in Morocco, and then it had a fall. You'll see when they had a dry hole in their Italian well. But it's been really quiet in the first half of this year, and that's because what they're doing, like a lot of companies do, when you've got an exciting exploration discovery, is you have to spend quite a lot of time working on the development. I spoke to Brian Mitchell, the exploration director, last week, and he's got he's getting everything ready, all his ducks in a row. So we've had nothing. Sound Energy retail holders are always expecting news. It had a very quiet first 6 months of the year, but it's now beginning to get going. So all the news is coming out. They've announced that they're going to go back to Morocco. They're going to drill T9, 10, and 11. They're hoping to. They've got a pipeline arrangement with somebody who they aren't going to pay for the pipeline. Somebody else will pay for the pipeline, and these wells are going to start drilling. There's a visit to Morocco in October. I'd be astonished if that didn't coincide with the well up and running. And they announced only yesterday that they've signed a rig contract, and it's mobilising, and it's on its way to the site. So, the second half of the year, having been a very quiet first half of the year, there's a lot going on for Sound in the second half of the year, which is why it stays very much in the bucket list. Yeah.
Okay. Victoria Oil and Gas down 17%. This is an interesting one. There's been a bit of a change of some of the emphasis, hasn't there, of the Cameroonian government on where it gets its energy.
Yeah, I mean, I think the Cameroon government is very like quite a lot of other African governments. It decides where the money is going to go from time to time. And back in January, the power generation business suddenly stopped getting any money from the government, so they stopped buying gas from Victoria. I think there are two things here. It would have been very easy to fling it out of the bucket list and say it's not going to work, but they are continuing to build up their business with all the other major customers they've got in Douala, which is the port, second city, but biggest city in Cameroon. And don't forget, those customers are not getting generation from the government either, so they need they're really big factories. I went to visit them, and so they're taking much more gas from Victoria, and of course margins are much higher selling it to individual companies than to the government. Second thing is, I'm sure it's an election year. There are some parts of Douala where they're getting 12 to 18 hours of power cutouts and so on. It can't be good for the president, and therefore I imagine that they will re-sign the contract with the government will start to fund it again. So I'm convinced that Victoria Oil and Gas will come back, because it's a virtual monopoly producer and supplier of gas in the country. And the third leg is that they're starting to produce this compressed gas, which the old-fashioned bottled gas, but nowadays for motor cars and so on. And they've got a great partnership there, which in the longer term will make them a lot of money.
So if this isn't on your warning list yet, 31 pence, how far up is this going to go, given what you've said?
Well, I mean, I think the shares, it was at 80p we saw with that at one stage. Yep. I would have thought that I would like to see them back at 50 first of all, but if they then got the contract back and they're starting to look a lot better, then they'll be selling a lot more gas and be more profitable than they were before. So let's get to 50 and see what happens.
Okay, fine. Quick visit the list again. One of the last stocks that's on there is MinX. We've got a percentage move there, down 20%. quick update on MinX. Is that on your watch list for potential?
Well, I met with Jay last week, and he's obviously been battered around because he did a farm out of their major asset in Tanzania, Rovuma, and I thought it was a very good farm out. Their biggest shareholders, the Zubair family, own 29% of his own company, and they decided to farm it out to them, which I think is an eminently sensible move. First of all, it gets things done. Zubair will be able to do things quicker and develop the project much more quickly than MinX could have done, especially with Solo. And also, they get paid for. They're getting carried for the project, and they remain as 25% holders. Yeah, the reason for is that there are a lot of retail in there who think it was worth a lot of money, and that they've given away the upside by doing the farm out. I don't agree.
Right. Okay. On the list, I just want to bring up the list again because for the fact it doesn't include Pantheon anymore, which you had, which, as I said at the top, was down 61%. That, I guess, for some is reason enough to sell it. What else is going on at Pantheon that caused you problems?
Well, I mean, Pantheon, if you remember, when we first started the bucket list, was the first ever winner of the annual. It was up 750% in the first year. And ironically, Pantheon has done nothing wrong in terms of discoveries. I think, operationally, it's been the problem. They've never really had a big dry hole. They had one unsuccessful, but it's operationally where it's gone horribly wrong. And I think there are a couple of points worth making here. First of all, the old adage. I don't invest in these companies myself, as you know, but the old adage is that things start to go wrong, the first cut is the cheapest. Cut your losses, and I should have done that some time ago. I still think the management is good. I think Jay Cheatham is a high quality CEO. They've had a few, as I say, operational problems, which I think will really struggle for the time being to get back into much more positive. Always happy to have a look at it again, but there's no doubt that when it's dragging down the rest of the bucket list, with no sign of a pickup, I think you've got to call it a day for the time being.
Okay, you've included Genel. Very brief update on Genel.
Well, Genel is doing very well indeed. I mean, Genel obviously it's in Kurdistan, and it's selling more and more crude from its original fields, which and they're getting paid for it, obviously, which they weren't in the old days. So they're back to all square. They've been paid very much everything that they owed. They're getting paid every month. But as part of the project, they've been drilling in the Peshkabir field, which has suddenly gone from strength to strength, and they're now producing 35,000 barrels a day from that field alone, which has got to the stage where, having been in significant debt 18 months ago, I expect Genel to be debt-free at the end of the year. So with Peshkabir going so well, they've got two gas fields called Binabawi and Moran, which were the longer-term sort of bread and butter for this company. They've discovered, I think, an oil field on the top, which they can work and develop first. So my guess is that we go from strength to strength, more incoming money, it's more profitable, the business is going extremely well. The new management, they've got a new chairman, they've got existing CEO who's first rate, they've got absolutely fantastic Bill Higgs and as the finance director, really good team, and I expect that business to go from strength to strength. It's it's deserving of a place in the bucket list.
274 pence at the moment. What's your target on that?
Well, I think this is one which is going to develop bit by bit. I mean, I think that 400p is what I'd like to see on the stock. It's been there before. There's no reason why not. It's had a quiet few months, but they will continue to deliver the goods, this company. Good. Okay. Well, we'll look forward to a catch up at the end of the year, and we can get an update with more of what's been happening with the bucket list. But Malcolm, in the meantime, thanks indeed for joining us. The author of MalcysBlog.com, Malcolm Graham Wood, is also founder and director of Hydrocarbon Capital.